Hi, welcome back to yet another exciting episode in Robin's School of Traders. First of all, thank you for a great response on my yesterday's videos on 14th of January index prediction. Uh, as you can go through my video, as I told you, the only thing which can save us is the PCR put call ratio. We got a gap up, and in first off, we got a good move, and the second out came down. So as the global data were not in line. So I'm sure you must have pulled up money. So I'm sure this data will help you out. So this I'll try to make this series on day in day out. So to give an overview, 360-degree view, we can see Nifty and Bank Nifty. So let's get started. As I said in the previous data, that only thing which can save us is your put call ratio. It was absolutely in the bottom end side. And so we got today morning, we got a gap up in Nifty. This is a 5-minute chart firm. So there's a small profit booking. And after that, what rally we got, and we again it came down. So we got a small doji kind of candle in Nifty. This is a sort of a good sign because after such a fall, we wanted a small candle. As I said in last episode also, this was trying to make some sort of an inverted hammer, but the week was not so great. But nevertheless, we got a gap up. So number one, number two, the market has respected the level of 23,311 and it came back. So are we in a process of getting a reversal? So let's see. So with this chart, we come to a conclusion. Let's see. When we get deep into it, we'll answer this question. Are we in some sort of reversal or we are again in a downfall? Same in Bank Nifty. Bank Nifty also had a gap up opening in the morning. Bank Nifty did pretty well in the morning, and you can see there was a huge headroom in Bank Nifty for both call and put. And in fact, Bank Nifty pretty well as compared to Nifty. You can see the Bank Nifty did a closing. We're expecting a closing in the vicinity of 49,000. It closed nearly at 49, 48, 779, 729. This I think is a good closing. So Bank Nifty has given us some sort of a thrust, and it has held Nifty to get an upsurge. So let's see what are the few data points. Now, guys, this is a data point I do on a tabular basis. I simply plot the opening, close, high, and this you will get in any software. And I take one as a benchmark. I take Bollinger Band as a benchmark. I'd like to share one good thing in Bollinger. Now, if you see a Bollinger Band median, let's take any rate. Let's say example, this lower Bollinger Band. For the last 1, 2, 3, 4, 5 days, the median was low, the Bollinger Band was making lower. But today it's somehow arrested. So what the bands are saying, these bands are high was also coming down, low was also coming down. But today there was some sort of arrest. So that was just a minor arrest. It's not a huge arrest, it's a minor arrest. If you see, this has changed. So both the bandwidths are saying there is something in the data. So that is a positive sign, but this is yet to be confirmed for volume. So today's volume was not so high. If the bandwidth takes a reversal, then we get a strong volume in the downside. So that is what we were expecting, but that we didn't get in the morning. So if the volumes are generally in this kind of thing, this reversal, this thrust will have a huge volume. So that is a one caught negative. But nevertheless, we can say as of now, the charts are saying it's on muted sides. Hence, the reversal fall is some sort of arrested. But as of this data point, RSI today closed at 34.89. We are hitting a rock bottom of 32.2. So there is obviously FIs DS coming into picture. Put call ratio, as I told yesterday, was on rock bottom that saved us. So it has jumped to 0.8. But the saddest part is this today also FI and have shaded 1,100% DI 790. I think government now, it's a high time for government to pitch in because FIs are not getting interest and they are simply leaving the market. That's not only a good sign. How much can DI give some? So that's a great still as well. In fact, in this run from these data is from 31 to 15 days data, they're having hardly a single day when FI has They are simply taking out what we are saving. All the DIs are mutual funds and DIs are saving. Dollar, if you see for the last 14 days, we see dollar was making a higher highs, but today is made a fall. As if you recall yesterday's video, we wanted to make some correlation between Nifty, dollar, and it's not a simple 2x2 quadrant. So we wanted to make some sort of correlation of Nifty in the first quadrant, dollar in the second quadrant, and maybe uh, gold in the third quadrant, and crude oil in the fourth quadrant. So one good news is that dollar has just given us slight upsurge in terms of negativity. Dow Jones, when I'm making the video, which is it's around 10:20 by my laptop time, it has been given higher rates. Now, if you go to Bank Nifty, same with Bank Nifty. What saved us was an absolutely low RSI 25.3, and the put call ratio was at the lower side, so that saved us. But only put call ratio jumped to 1.1. So, Robin, what are we expected tomorrow? So let's see. If you plot all the four big banks, HDFC Bank, if you see, has given some sort of and I really can't make some pattern, but it's given upsurge. We can't term this as a bullish kicker up, so the gap is not there, but that made some sort of, all the candles are in on a green, so that's a great part. So we can expect some sort of retracement, which was retaliation in the market of the, so buyers are slowly and steadily pulling up the market, as the data is saying. Now let's see indices. Reliance has not done well today. So Reliance, we needed a support from Reliance. So yesterday TCS gave a support, but TCS fell because the dollar went down. But we were expecting Reliance to pitch in this journey. But Reliance was very new, with a lovely doji candle touching all the EMA. So tomorrow or day after tomorrow, do a make or break kind of journey. So that's a good sign. HDFC Bank, as we saw in the previous chart, it's some sort of higher rise, and ITC is again is making lower. So this chart, and from this chart, we can't make any kind of conclusion. But one thing, we are getting a strong retaliation. We have strong support. Yesterday, we got strong support only from one sector, that is from TCS. Today, we have got a support from Adani Goods, and we got a support from banking sector. Reliance and the FMCG sector did not pitch it. Okay, what next? If you see the Dow Jones when they're making the video, so after a great fall, Dow Jones was able to expect this level. This whole time with this particular level of today's closing, then we expect Dow Jones to move to a level of 43,000. That's a great sign, as it help us in the journey of our next category. We have to give it a strong sentiment in tomorrow's market if we get a strong closing. Gold, as I've told you, gold for yesterday was making a higher rise. For last 2 days has come down when I'm making this video. So as the market goes up and dollar comes down, gold should theoretically come down. There is not any thumb rule, but we have seen in the equation the inverse correlation between Nifty, gold, crude oil, and dollar. Now let's see where we are poised on dollar. So dollar had made an all-time highs yesterday of 86.62. Now it has come down to 86. There's a small correction. This seems to be a some sort of harami candle. So the term harami means the pregnant lady. So this is making an absolute harami candle. We still have a few more hours to be left. So as of now, when making the video, this looks a typical harami candle, and the tops have been have touched. So okay. Now, when you look at the option chain of indices and Nifty, the first thing first, VIX has come down. So VIX yesterday was sitting and hovering at very high. Let's go to VIX chart. So VIX has also come down. Now, if you plot is simply we plot Bollinger Band in the name in VIX, as I told you. Whenever VIX touches or goes to touches in the vicinity of 17K, there's a steep correction. Today we got a correction. It was yesterday made a higher of 16.4. Now it has come down. So we can expect, VIX is saying we can expect some sort of cooling off. So VIX might cool off and come down to this particular level. So one can be ready So, guys, there's one thing you can make it in your years. Anywhere VIX comes in 17, this is the time you should be looking for any sort of V-shaped recovery or any sort of pattern and buy the stocks. This we have seen. And when VIX settles in the vicinity of 12, 12 and a half, you should be looking inverted V-shaped pattern, uh, inverted impact. Okay, now let's go and see the option chain. So option chain is quite evident. A strong resistance at 23,200. Market tried in the morning but came down, and it has a very strong support over here. And anything gap up, gap down, we can't negate the fact that we can very strong support on 3,000, and we get some gap up tomorrow. The first target will be 22 or 24. So that's how we are poised as of. Now let us see. Uh, Now let us see the Bank Nifty. The Bank Nifty has fairly good as compared to Nifty. Touched all-time high of 49K and bounced back. So that was in the second or first. So very, very strong resistance at 49K. This hurdle is to be broken. The hurdle had very strong support at 48,500. So this is the range one. Extreme points one can look at in buying Nifty Bank Nifty. So this we can take as a contract rate also. And if we don't have a strong, as of now, the market is cold, so we can expect a small muted opening tomorrow. And just depending upon the buyers and sellers' cursor who wins. If you're able to reach this 49K, then we are expected to make the next level, which is 49,500. Okay. Now, this we have seen. So what we are saying while we are making this particular data with prediction of Nifty Bank Nifty, we take the Bollinger Band, high is low, we take an RSI into consideration, we take this put call ratio into consideration. We have seen the VIX. VIX today has pulled off, as I told yesterday. For last 3 days, VIX was making higher highs. And today VIX had pulled up a little bit. But one thing which is not at all in Indian markets positivity is FIs. So FIs are absolutely shedding the money, they're pulling out of. And it's only the DIs which are safe. Now this data I think we will enjoy. This is the level where you can trade. Right on the level, these are the level. Robert Metrican's level, these levels are nothing but the Fibonacci retracement, which I have got from Fibonacci zigzag zone, plus Gantt square plus Gantt square. So this level, and how did I arrive this level? So this level have been arrived at by your daily time frame, weekly time frame, and monthly time. So one data which I want to share, this will be acting as a strong point of resistance, because over here there's a coincidence of this data. The ratios coincides in the daily time frame over here. It is coinciding at 4-hour time frame, and it is also coinciding at weekly time. So this will be a very, very strong resistance for Nifty. These are the levels, and as we told you in the morning, this was the level it tried to make, but it touched almost the same. So this is the range Nifty is operated with last the 14th of. So we can trade these levels. We can trade this particular level. So I think there's a typo over here. So you can take the mean of this 260 and 225 is the mean. These two levels easily trade. So guys, I'm sure you must have enjoyed the video. If you enjoyed the video, do subscribe to my channel and request to hit the bell icon. So whatever video I'm making will come to you direct. This prediction of Nifty and Bank Nifty, I've got a very strong response on 14th. I'm sure this data will help you out for tomorrow's trading. Do take a screenshot of this particular page. These are the levels you can vouch on, because these are not the simple levels. These are Fibonacci levels plus Gantt levels. Plus, if you can plot EMAs also, these are nothing but also EMA, all the codal ratios are EMA. Thank you.